Okay,
More to
I
know.
think we
Is
are,
that our?
we are live, folks.
Do with that, or is that?
We'll talk about it after our riveting audit discussion.
Setting up. All right, hold on one second. Okay, we're redirecting and I'm going to mute it and we're live. Of course, now it won't let me. We'll just do that. There we go. Good, we're live.
And Rich John is the chair.
Yes.
So I'd like to call the meeting of the Finance Committee to order. And I would note that Todd Brewer is appearing virtually. Pursuant to our policy, he had a business emergency that prevented his in-person attendance, which means he qualifies under the policy. He does not count towards quorum, but will be allowed to vote if we end up taking any votes. And I would note John Guttridge is here for purposes of quorum, but is out of the room at the moment. Did that get our meeting started? I think it did.
Yes.
Okay. And Heather, I turn it over to you or to our auditors, however we
I'm
want to
gonna
proceed.
Turn it right over to the auditing team at Insero. We're here today to review the draft audit for the IDA and the Development Corporation.
Awesome. Thank you all for having us here this afternoon and for bumping this another week for us. Give us enough time to get the draft statements ready for you guys. I'm Evan Cleveland, and with me is Rita King. Rita did most of the field work and also prepared the report. Yep. So she really did everything.
Somebody's got to take credit.
Yep. So I'm going to talk mostly off of the executive summary. So that was the document on the top here. And I'm on page 1 of the executive summary. So at the top of the executive summary, it just notes the nature of the organizations, really describes what the IDA and its relationship with the Development Corp and why the Development Corp is a blended component unit. Because of financial obligations that the IDA pays on its behalf. At the top, we're issuing an unmodified opinion on the basic financial statements. That's otherwise known as a clean opinion. That's an opinion that you can get. Means your assets, liabilities, net position, revenues and expenses are all fairly stated in all material respects. And next, because we perform an audit in accordance with government auditing standards, we have to issue a report on internal control of financial reporting and compliance. And that report identified no instances of non-compliance and no material internal control weaknesses. And in addition to the main financial report, we have 2 letters that accompany the report. It's a communication to those charged with governance at the conclusion of the audit and a management comment letter. I'm going to skip to the communication letter now, which was also in your package behind the comment letter.
I just sent the draft documents to Drew and my apologies for missing that. So you should be getting those in your email.
So communication letter, we're required to communicate certain things at the conclusion of the audit, and we do so in writing through this letter. On the first page under significant audit matters, qualitative aspects of accounting practices, notes that the entities adopted government accounting standards update number 87, it's leases. And this had no material impact on the financial statements at all. You do have leases, but they're for $1, they're not material. So you do technically implement, but it doesn't have an effect on your financial statements. And there were no significant estimates related to the financial statements. And page 2 at the top, point out significant disclosures for users of the financial statements, those being related parties that are in notes 1 and 6. And we'll go over those through the footnotes. We encountered no significant difficulties in performing the audit. We had no corrected or uncorrected misstatements, had no disagreements with management. After the audit's over, we'll obtain a management representation letter, which essentially says that we've been provided with everything that we need to perform the audit and nothing would change the unmodified opinion we've rendered. There were no consultations with other independent accountants, no other audit findings or issues. And page 3, other matters just describes our responsibilities related to what's called required supplementary information. and what's called supplementary information. So required supplementary information, or RSI, is your management's discussion and analysis. And we evaluate that as a whole in comparison to the basic financial statements, and there's no opinion that's expressed on it. And the schedules of indebtedness and projects, those are supplementary information, and we do opine on those, and we had no issues related to those schedules either. Although one is almost 100% complete, as the schedule of projects, we're still waiting on
This is
a few more confirmations.
And those are these highlighted.
the highlighted ones, and I can review those for those on the Zoom if you want, when we get there.
Mhm.
Yeah.
We also went through a management comment letter, which has no comments, so it's all I'll discuss with that one. And then I'll turn it over to Rita, there's actually one more page in the executive summary. Factors bearing on the agency's future that we include here. So it just says how much the entity has committed to IAED for the subsequent year. It's almost $460,000 of administrative support that the IDA and Development Corp will pay for. Now I'll turn it over to Rita.
So on page 3, this is the 5-year analysis of the combined statement. So this has both the IDA and the Development Corp in one. So your total assets increased about $55,000 during the year, which really is just a result of your operations. You have no liabilities as you didn't last year. So your total net position also increased $55,000. On the bottom of the page, total revenues decreased $2.16 million. And that's really because in 2021, a lot of projects were closed on, and there are not nearly as many in 2022. Your total expenses also decreased approximately $42,000. And that's just your decreases in cost, and is offset by an increase in the contribution. So again, your change in that position is $55,000. Turn the page, following page 4. This breaks it up between the Industrial Development Agency and the Development Corp. So the top is IDA. Again, the cash decrease in the IDA, approximately $230,000. Again, due to your operations, really, you don't have those projects. The Development Corp, your cash actually increased $285,000, and that's related to the increase in the bond fee revenue. That's where we get the offset of the 55. On page 5 are the revenue and expenses. As I mentioned earlier, your revenues decreased significantly, and you can see that in the IDA because of those project closures. Your expenses, there was a decrease for the IDA due to prior year grants that there were no expenses this year, or smaller expenses. Your Development Corp, you can see the increase in revenue to $334,000 from just over $1,000 last year. And that's the increase in the bond fee revenue. There's also an increase in expenses, and that was due to really a new grant for the broadband fund, like per the broadband funding agreement. So your IDA had a negative change in that position. The Development Corp had a positive change in that position, resulting overall in a positive change.
Can I ask a question? So I believe in the IDA, we committed $500,000 to a project and another, I think, $100,000 to a project. So how do those show up in this?
They're in the footnotes. So when we dive in, there's a section of commitments and contingencies that we detail them. And if they are split, they'd still show up within your unassigned category anyway.
Yep.
So I had the same question as Jeff, and I just wondered why they wouldn't be. Is it on page 3 where it just gives the overall totals?
Mhm.
I see in 2021, there was this $316,895 for administrative fees receivable. I just, that the administrative fees for the for IAED, as well as that 500,000 plus another 100,000. I mean, that would change our unrestricted net position.
Yes.
Is there any reason why it wouldn't be there on that first page in that figure 1?
So regardless of whether or not you have committed, assigned, restricted, well, restricted is the only one that you split. On this statement, you can have 3 categories. You can have unassigned, you can have restricted, you can have net investment and capital assets. So those are the only 3 that will show on the statements. But we can further break it out a little bit more in the footnotes if you guys would prefer, where we take out the amounts and we say leaving X amount of unassigned in the commitment footnote. When we click there, or we can flip to it right now and talk about the commitments footnote.
What page is that on for the financial?
Wouldn't they be considered restricted? Because what I'm concerned about is the total balance at the IDA and the LDC.
Yep.
And if you take those out, the total balance is less.
So it's restricted when there's an external legal restriction on it. So this would be committed or assigned is what category it would be in for this entity. So I'm on page 12.
Wouldn't I mean, we had a board approval as part of the agreement with one of the entities for the $500,000. That wouldn't qualify as a restriction that would then show up in the financials?
No.
Right, if they have a legal right to it under our abatement contract.
This would be something under general municipal law or something like that would cause it to have a restricted.
Right, or if it was like donor restricted or something like that. So let's talk about the notes and see where we're at after that.
So after the second paragraph of the commitments, we say that there's 500,000 and then 100,000 in addition to the 459 to IAD. And then we can say this leaves X amount unrestricted after I back those
I'm
out.
saying put it right in that footnote.
Yeah.
If you just expand the footnote a little bit so that it would say what the actual balance was.
I could add a chart to it. If that would make it more visual for.
But there's no way under county guidance that we can put it onto the balance sheet
Correct.
to show it in there.
Yep.
And that's not meaningfully an account payable, like,
Accrued liability or something like that.
right, I mean, because you do have accounts payable in here, and it's like, if we owe that money to somebody, but that's presumably if we have received an
If
invoice.
the services have been rendered, yeah.
Right. So that it'll just evaporate at that point from our financial statement?
Yeah, next year.
It'll show as an expense.
Yeah,
next year,
expense
right?
next year, yeah.
Oh, okay. But we can't show on this that we've committed it.
We can in note 7 if you want me to.
Yes, I think we should. I think, yeah, go ahead and
Do it.
yeah, just add that in. I think that was probably helpful.
Mhm.
So I'll just say this leaves dollar value of unassigned after commitments.
But it can't go on page 3 that there's commitments.
We can add it to the executive summary if you want me to split it out in the executive summary, but the main financial statement, we can.
Or perhaps, I mean, could you put a footnote actually on this page about it?
Yeah, this executive summary,
Yeah.
100%, yeah, we can split
Right.
out your.
Right, because I mean, I think that would probably better address Heather's question, because really it's just this, like, if somebody's looking at this as a snapshot of our financials, that's the thing you're trying to avoid, is like, they think, oh, you've got $3.1 million. It's like, well, no,
Yeah, but
we don't really.
Yeah,
but where does our executive summary just stays within our committee, right? So It's not
it can be,
necessarily something
it can be shared with.
Typically I post these all on the website, so it's on the idea. Yeah.
Yeah.
Put that up before I.
Yeah, so I think it would be good to put it both places.
Okay.
I mean, that's pretty concerned.
We will definitely do that.
Can you footnote it on page 3 under figure 1?
Yeah, that's what we just said.
Okay,
Yeah. Yeah, totally.
thank you.
So we'll break it out here on the executive summary and then we'll break it out in the footnote.
Yeah.
Well,
Excellent.
Great.
Wouldn't want to spend it twice. I mean, I kind of would.
I would like to.
Yeah.
I feel like it wouldn't be responsible to spend it twice.
That's true. Yeah, that's a good
Have done that. Yeah.
Probably call it future commitments. Or 2023 commitments.
Probably future.
Okay, yeah. Okay. Good discussion, good questions.
Yeah,
Are there any other questions on the executive summary, the numbers, the letters before we dive into the report? And like we say every year, your fee income, that's like a roller coaster. It's gonna be up and down
mhm.
every year. Just last year was abnormally high after I guess, are we out of the pandemic now?
I don't know.
May, when the president declares it is, that's what the plan is, right?
So in the main financial report, I'm going to skip ahead all the way to the footnotes. So we talked about the independent auditors report and the management's discussion and analysis, and the main financials are all what we went over through the executive summary. So note 1, there were really no changes except on page 9. To the related party footnote and note 1, we added another section related to IAED Foundation because there was a grant related to the food BIP program to IAED Foundation. So we added another few sentences regarding that because that's also disclosed in the note 6. And then at the bottom of the page, we have the policies regarding leases, which nothing was recorded related to them.
Yeah, I just, in note 6, I would note that it's the TCIDA Foundation, not the IAED Foundation.
Got it.
And the leases, I mean, this is what we talked about in our last meeting, right? It's like, these are leases where we are leasing something from someone else, not like the lease backs that we do on the abatement.
It does, those are effective under, however, they're for $1 each.
Right.
Yep, so that's technically you adopt it, but it has no effect where we say on the next page under new accounting standards, we say GASB 87 and there's no material impacts on the financial statements.
Right, okay.
And then I'll point out another one, the future accounting standards. There's another one next year related to subscription-based information technology arrangements. I looked at your numbers real quick to see who pays for Quicken, which is the software that the county uses, and I believe the county does. The county gets to implement that as part of the subscription-based information technology arrangement. So it's the right to use another entity's software and record it over the life of the agreement at present value, similarly to this lease standard.
Right. But I mean, we don't have any, IDA doesn't have any obligations of that kind. If anything, IAED might, or the county might, but IDA itself doesn't.
Correct.
Right.
Yep.
And is GASB 87, is that how you recognize the obligations under the lease?
Yes.
For accounting purposes?
Yep.
So that's a fallout from
The
mortgage crisis?
probably, yeah.
Okay.
What it really was, it's piggybacking off of the financial accounting standards board that does for-profits and not-for-profits. They have a lease standard, and it's really for your public filers to let investors know what you're paying for or on the hook for another 10 years.
That's a WeWork fallout right there is what that is.
Yeah.
Right. I mean,
So
if that's where that went.
tells the investors what your future cash obligations are, because previously it was in your revenue or in your expenses. So it's a follow from that, and it's a challenging one to implement for a lot of entities. Just good thing for this one that had no effect. Continuing along to page 11, we have tax abatements. You see some of these numbers are sort of shaded. Obviously yellow highlighting doesn't come through on this, but they're sort of shaded. They're not 100% yet until we have all the information from the project schedule for the things that are highlighted in yellow. And note 5 describes your deposits and investments that you have, 2.6 million and $543,000 in cash. It's all collateralized by FDIC and with securities.
That note number 4 there, the second paragraph there. So that's obviously at the IDA, we've been getting some pushback and some feedback on all of that because people are concerned about abatements. Is there any way that we could put in that footnote, if they didn't do the projects, what the lost real estate taxes would have been?
What they would have paid?
Right.
Yeah.
So, you know, we talk about the,
Yeah, you don't do the project, the entity decides, all right, we're going to North Carolina and
yeah, that, you know, the famous one that I know Heather always likes to cite is like the Marriott, for example, like, you know, that piece of sliver of property was $4,000 per year. And no one else was going to put anything there. And then all of a sudden, you know, we put the Marriott there and you know, even though we're giving them abatements, the amount of increase in tax revenue associated with that is significant.
Mhm.
So is that something, Heather, I'm throwing it out there as an idea because you know what we're dealing with and Rich, you know what we're getting pushback on. I don't know.
Right, I mean, that's $357,000 a year in taxes.
By the way, I submitted that op-ed and they didn't do anything. I sent.
It's stuck in their spam folder. I talked to Jimmy Jordan about it on Friday, great length. He's actually working on something.
Well, I then ran into Matt Butler on Tuesday or Wednesday last week. He said it would be in by end of week.
They apparently just dug it out of their spam folder. So,
Okay,
You know.
well,
and then they are doing something.
glad they got a shovel.
And I spent a long time with Jimmy on it on Friday, so he's gotten an indication. It'll be
So
interesting.
The media tends to pick up on this, you know, the abatement value, we're giving away all these tax dollars and we're taking them away from school children. You know, it's a little bit sensational. And I agree with you, Jeff, that, you know, the really important number is the dollars in new taxes paid. But for the IDA incentive, these projects likely would not happen. I just, the word abatement is such a hot button word. I'm wondering if we can change the narrative a little bit and say something to the effect of, you know, tax savings to support, you know, the project moving forward rather than abated amount.
Right, but also Heather, then would you want us to, or would, not we, but intro to add like another sentence or two to include how much tax dollars was included because we've done these projects?
Right, I mean, there's a third number that's like the $4 million is how much we received. But there's there's a number that's less than 4 million that is what would have been paid on those parcels had they never actually commenced the project. And I don't know what that number is, or if we even have the ability to calculate it, right? Because we would have to have kept track.
I would have to crunch the numbers.
Value
Because
of every single parcel times the mill rate, blah, 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 blah.
the assessment obviously change when you build a building versus a piece of land. And some of these are like in their 8th year. It's
You'd have to
Yeah,
go
it's
wait.
not something that we have readily tracked.
heavily, it would take a lot of work right now.
Right?
Yeah,
I mean, those numbers are in the memos that you send us, right?
Yeah.
Like you send us what that base tax is and then
But you have to calculate all the changes in taxes on that
right, in order to get to the current year.
theoretical amount. Yeah. It
I
would.
mean,
Yeah,
and also,
well,
the only thing that's gonna do is reduce the number that was received in payments. Right? Because I mean, the rate says right here, like $4 million was received. That's the benefit to the community. It's slightly overstated by whatever they would have paid had they not gotten the abatement.
Right, I mean, but that number could be significant, right? I mean, that number could be $500,000 of what we may have received if they never did this project. So obviously, it sounds like it's too much work to do it for this financials, but maybe we should, you know, consider something going forward that we try and track those numbers. So we can present it, given all the feedback we're getting.
I mean, I think that at this point we actually do. It's a question of where it's put, right? Because it's in the benefit memos that we get in every agenda packet. It's like there's a column for these are what the taxes would be if we're not for the project. And I mean, of course, it's pro forma rather than after the fact, but there's no other way to do
it's
that.
projected, and we've only been doing that for maybe 2 or 3 years. So, we can't put projected versus actual. I mean, we have a spreadsheet for each project, but I don't know that we see the taxes that were paid on that spreadsheet prior to the pilot being put in place. I mean, we would have to radically restructure the way that we're tracking our projects, adding columns, adding, an ability to total those numbers. Like, I understand what you're saying, and yeah, it would be great if we had that, but we just don't have it
I
over.
almost wonder if it would be possible for us to just put in a column that was just what was the original assessment before this project, and just like, whether it's go forward or not, just kind of keep that in our, in file. So we're not actually trying to project what the tax burden would have been, but we can, we could say at any time, like, well, the sum total of all these projects was this many millions, and now it's this much larger number of millions in assessed value. Just for keeping track of that one data point of like what the assessment was before the project started. That could be a pretty compelling picture without a whole lot of effort. If that's something that's not too challenging.
Yeah, if we assigned a title to it, like starting point taxes.
Well, just assessed value, because I mean, we can, at any point, we can state what the current assessed value is. But then,
But
what was the
starting
original
point taxes would be
value?
the dollar figure that would have been collected in that year that the project was approved. And we're not going to do the calculation year by year and
Right.
try to estimate
Right.
taxes, but just
Right.
say, look, 4 million versus, 1.1 million.
Right.
Yeah. And let somebody argue with us, well,
Right.
this percent.
Well, I mean, the other thing that's sort of interesting is this 4 million is the payments in 2022, but that doesn't include any of the projects that have concluded their pilots and now are on full assessment. And that's a much, much larger number.
True.
If you look back and you say, well, what about the project in year 11? That now exists for the community because of the abatement 11 years ago.
Right.
And, that was, so it's, it gets really hard to keep track of all of it, but it's like,
I
what's the picture
like
we're
what
trying
you're
to
saying,
paint,
John.
right?
But maybe we should, maybe at the next meeting, we say, okay, these are the things we want to try and track going forward.
Right.
So we can have this type of data when these people question it.
Perhaps not the audit meeting conversation though.
No, it's where I would suggest you put all this information is the factors bearing on the entity's future and the management's discussion and analysis. That's like the perfect place to put all this information in. Yeah, I know it says on the future.
You got page.
I'm on page 4B. Yeah, so this is where you say like what we're working on currently, what's happening in the future, and you can say what's going on here. This is a good place to put all the pilot information and information regarding the taxes, what they were pre-project, post-project.
Well, it's an interesting question because it doesn't really actually bear on our future. It bears on the county, the city and the school district's future more than anything else. Right?
Yeah.
But
Yeah.
certainly an interesting conversation for a board meeting, perhaps.
Yep.
So
Great.
I could certainly put in a sentence in there about, since its inception, the IDA has delivered tax incentives to 139 projects that during the term of their incentive paid X amount of dollars in new property taxes. I mean, that's the data that we have, and I could certainly start putting that in there every year.
I'm not sure that actually belongs in the audit though. Like, I feel like there's something else here, right? Like, because it's not really about our financial position. Like, I think this is important information to track, but I don't know that it's like.
I think we've got a little bit of a leeway to put stuff like that in
No.
notes, though, right?
The definitely the management's discussion and analysis is, I think, the perfect.
Or could we,
place to put
could we do it in the footnotes too?
Yeah, you
If we
Yeah.
asked to?
You could. They're your footnotes. They're not mine.
Yeah.
Yeah. I just, if it's in note 4, I have to audit it.
Mhm.
But
I have to audit it.
yeah, Rita has to audit it.
So put it in the measure.
If it's in 4B, we don't express an opinion on it. So it's probably the better that it goes there.
Okay.
Yeah,
Because then someone can't come and say, ask for the specific
yeah.
and say
Right,
that's
prove it.
$2 off or.
Right. Yeah, fair enough.
Yeah, I agree.
So then it sounds like we'll put it in the executive. Heather will be able to get that information and then you guys will put it in the executive section.
Yes. So if you want to type up a sentence for me to add to the factors bearing on the agency's future, and we'll add it in.
And should I also add in, the megawatts of solar and the, housing units, affordable housing units?
This is whatever you want to add, as long as it's reasonable.
Heather, if you want to put together maybe bullet point,
Yeah,
you know,
I can certainly do that. And I think anywhere that we can get that information out there is a benefit to the organization. I just wonder if on note 4, instead of calling it tax abatements, you could call it tax incentives.
Sure.
It's an interesting, I wonder about that language, right? Because incentive really does sound like we are actually giving somebody something, whereas abatement is.
I like incentive better than abatement, because abatement sounds like you're giving it away.
Well,
It's interesting.
abatement
I read it
is
actually the other way
used
around.
pretty negatively in the public space, in the press, that, we're abating school taxes, we're taking money away. We're incentivizing development that actually results in new tax base.
Does that just look like a smoke screen though, to people that are already questioning?
Yeah, we'll have to also do some research on the GASB standard related to tax abatements and see if you can call it tax incentive first.
I don't know. if we-
There is a standard that came out.
Well, if you can't say it, no. We appreciate your professional opinion and your adherence to standards.
Okay.
Are we on the schedule of indebtedness here yet?
Just one other thing that I'd like to point out, on page 12 under contingencies. So I indicated there was a bond TCP Foundation that was in default, and this is, we added this sentence right here. You guys want to let us know if this is appropriate. It just says that you're notified of default on the bond and you're in the process of determining next steps regarding the issuance.
I'm sorry, what, page 12?
Yep.
Do we have, speaking about that, we're not actually the bond holder, we are a bond conduit, so we don't actually have any liability for that. If they default, that's sort of a bummer for everyone involved, but it's not like that actually impacts our financial position, right?
Yeah, and you do report it on your schedule of indebtedness, and I talked with some other individuals, they said just leave it there on here.
Yeah, they
So,
did
still,
report their status, which said they made no payments, so we
Yeah.
can see the report, and it's in our report.
Okay,
Well, maybe you could take that last sentence off. I mean, if we talk to our bond counsel, they would say there are no further steps for us to take at this time.
okay, so we'll just end at you were notified of default on one of the bonds.
Would it be worth actually stating that there's no risk to the corporation from that? I think that actually would be a valuable statement, if you can make that statement truthfully.
It is.
Yeah,
It is.
well, but GASB standard.
Yeah, and that there's no risk
Yeah,
associated.
if you could, I think that actually is a really valuable point, because it reads like we've got we're taking a hit here.
Yeah, okay.
And we're not, we're a conduit, we got our fee, somebody else is holding it, it's unfortunate for those individuals, but it's not actually us, right?
Yeah, I think that might be helpful. I do vaguely remember there was some discussion with the county when the county was looking at their bond rating, that the bond rating agency had questions about this. And, we're just a conduit issuer, so it shouldn't impact, the county's bond rating or anything of the nature. But the fact that it came up in discussion was a little surprising to me as well.
Yep.
Yeah, we get questions at the county every year about that, and probably 2-3 calls from bondholders to say, is there anything the county wants to do to step in for this?
No.
So, yeah.
You don't want to add something else to your list just for funsies?
So next page is the both of the schedules of indebtedness, and this shows the beginning balances, amounts paid, and what's outstanding that the Development Corp acted as a conduit for. So there was a 3.7 million at the end of the year for the IDA, and then 213 million for the Development Corp, and you'll see which one it is specifically that we were referring to. That's got no payments. It's a pretty large balance.
So do we need on the, on page 13, do we still need the CDP, Cornell Heat and Power, since there was nothing?
I just saw that.
Oh, the one with zero across?
There were two,
Yeah.
yeah. We don't need those.
We'll just remove
yeah.
those.
Is there, well, but those have not yet matured. But they don't know anything.
Yeah.
They were paid off early.
Yep.
Yeah.
Well, and I believe the Cornell Lake Source Cooling was paid off last year.
Yeah,
So that's why
Oh,
it's
right.
there.
Yep.
Right, but it had a during the beginning of fiscal year balance. I don't know if it's possible to put some note to this effect, but the way that this reads to me, it's unclear indebtedness to whom, whether it's, we owe this or to these parties, or they owe it to someone else.
Yep.
Is it possible to make a note somewhere making that clear? Because I mean, if I were to write a schedule of indebtedness for myself, I'd be writing down my mortgages that I owe other people. And perhaps I'm just,
I think
confused about how that should
in
go.
note 3, where they describe the industrial revenue bonds, I believe it says something about on page 10.
It makes that clear.
Yeah, that agency and corporation don't record assets and liabilities from the bonds. Their function is to arrange financing.
Okay.
Page 10.
So you're looking at note 3 here,
Yep.
Page 10.
Yep.
non-obligation to the agency. So I mean, would it be possible to just like state that says certain bonds or whatever, the bonds listed on the schedule of indebtedness on page 13. Right,
Reference that.
actually reference that schedule of indebtedness is the thing that we're talking about here.
Yeah.
Rather than just saying certain.
Page 13 and 14.
Right.
Really,
Yeah, that-
not obligations of the agency, that's.
Bonds and notes. Right there. Okay, so we'll add that as well.
Or just a footnote on the bottom that says something like, amounts owed to bondholders not. Blah, 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 or something else like that. However you want to do it is fine, I think, just as long as that's really clear.
So we'll see if we can find anything, other IDAs as well as on there, and see if there's some wording I can borrow. That'll be helpful. And then the final page is the schedule of projects. So we are briefly discussing this, how it's very small. I can barely see it.
I can
So-
speak to it. I did pass out to the members and folks in person. I can send it to you, Drew and Todd, but this is still draft. There is one project that I actually did speak to today. I've spoken to a couple of times the last week or so. Top Point Brewing, and they are getting to me. They're the only one who's outstanding with their sales tax exemption amount. And that did expire last year, so I should be getting that today. I was promised that, as well as their employment numbers. There are a few others, such as the 209-215 Dryden Associates, which did not pledge any jobs, but I have not yet received the actual form that says from them, so I'm working on that. And there are a couple, such as the Cary Building, which they have they have multiple tenants, some of which have reported their job numbers. Not all of the tenants. I did speak with the project manager for the Cary Building, who is doubling their efforts to get the other two tenants, the Bike Bar and Rev, to turn in their employment information. Also, Italti, which is the Mia restaurant, which the pilot closed last year. I have not received any information regarding that. So just the same as last year, and Harold's Holding. So those are just the few that I'm waiting for. So, I mean, in terms of the financials, it's not going to change that unless I do have the Salt Point Brewing sales tax.
That'll change.
That will change one number, but I should have that today.
I know, those are all the ones that are highlighted, Ina.
They're highlighted in the document I emailed you, and I passed out a much more less highlighted document, which I will send to you as well. So there's just a few out there.
I mean, does it matter if we're missing jobs numbers? That doesn't impact our financial position
No.
at all. We just put some footnote in the audit that says we didn't get quite all the information and. Well,
Right, and I have to the end of the month, get it into Paris, so I can get everything in.
So we want to hold them accountable too. Yep, okay.
Right, I mean,
What are we gonna be able to do?
Italti, that one's terminated and the building's been sold and the owner lives in Thailand and there's no.
Right, so-
Anything,
There will be
Right.
zero.
so.
This was the last year of the pilot, and the pilot has now been terminated and the building was sold. Yes, we know this. Congratulations to the owner.
Whoever that may be.
Beautiful building.
It's causing-
Uh,
it's causing-
Can we accept the audit on Wednesday without all of the jobs information? And I assume we can, but
Yes.
I mean,
for Paris, you need it by the end of the month.
I do, and there's a couple of schools of thoughts. You could say they did not report if after 5 attempts to get it. But we try not to do that because it would be nice to actually report the actual numbers. So I do my very best to try to follow up with them, but they will
So
be
in
in.
terms of Wednesday's meeting, I would suggest that we just adopt it subject to some of those final numbers on that one spreadsheet may change.
Yeah,
Yeah,
that makes sense.
and I'm pretty confident I'll have the sales tax stuff by the end of today. So I'll get that to you as soon as possible.
Is there any, I mean, bit of a complex subject, but I noticed Arrowhead Ventures still appears on here, the IDA has moved to terminate and recapture on that. That's an ongoing and highly uncertain process from here forward, but it could have some financial implications. I mean, most notably, there could be legal fees that we may or may not actually recover. I don't know if there's anything.
Gotta be careful.
Right,
Because we're live.
right.
We gotta,
Yeah, no. I mean, I'm trying not to say anything that's not public, right?
yeah.
Well, the pilot was terminated in
Right.
July 2022. That is public.
Right,
So when the pilot's terminated, this is the last year. And then when I go into Paris, it says this is the last year, so and so, and then next year it will not show up because it will be gone, terminated.
right. I don't know if there's anything to report in the audit about that is happening. I mean, we
No,
can't say
all we
anything
can
about the
say
future. We have
really-
no idea what's gonna happen, right?
All we can say publicly is that there is pending legal proceedings.
Right, and I don't know if we wanna take that as, I mean, I don't know if it's relevant to our financial position or.
I feel like there's any liability there, John, for us, so I would say that my first inclination is no, we wouldn't disclose it. It's not like, we're gonna get anything additional. If there is something, then it's gonna go to the school districts and
Sure,
different
sure.
taxes.
Right.
So.
I don't think it's to.
Yeah, and
Point where-
technically, all of the documents say that if there's a lawsuit, that they're responsible for legal fees. The reality is that the IDA may end up paying some of those legal fees and not recouping those. And that would be a discussion that the IDA is going to have in executive session about how far they want to go and in terms of trying to recapture some of those funds.
Are we fiduciary bound to try to capture that somehow for the schools?
I think there's a.
Well, if
complicated
it's
risk
going to
reward
cost you
analysis we'll have to
$5
do.
million in legal fees, then you're going to maybe recoup $1 million. You might want to make some determination at some point that rather than spend more money, then you're going to get back, that you might not want to pursue that.
But we gotta take a measure to make sure we try to get back what we can.
Yeah, absolutely. And that, I mean. is what
All
we
I'm
have.
going to say is there's pending legal activity. Or I should say ongoing.
Ongoing, yeah. But there's no anything that doesn't create any meaningful risks for us. It's just the thing we're doing. Okay, that's fine. That's really the only relevant conversation today.
Anything else? Sounds like we're in a good place. So you have,
So overall, yeah, the audit went well, as it always does. As it always has happened, we're waiting on a few.
Much better this year than
Yeah.
last year.
Do we need to vote as a committee to move it to the full board pending, obviously, the items we've discussed?
Want to chair this committee?
Rich
Oh, Rich.
I didn't know
I would
Rich
invite-
missed the meeting, so we voted him.
Okay, I'll move to,
do I have a second?
I'll second.
Okay, any discussion? All those in favor? That's unanimous. All right, so that'll go to the IDA and the DC on Wednesday.
I will get you by the end of the day, or Evan and your team, I will get you by the end of the day, the additional numbers to add into the executive summary.
Yep. Should-
And I need to run because I'm double booked at 2:00, so.
All right. Goodbye, Heather.
at least one of those things.
Should we send to the full board the draft docs before, or should we just have Sarah bring them? How do you wanna?
I think it probably, well, that's a good question, because if they're gonna then ask all the same questions we just asked and then got updated, that's just gonna be a waste of time.
Hmm.
Oh,
Yeah, but
Could
you gotta
we
remember,
send
we're a bunch of
them a-
financial geeks here, maybe the other board members.
Are we really?
Could we send them a new draft Wednesday morning?
Yeah,
Yeah, and I'll
Yeah,
have
I think
hopefully
that's
more,
probably
better numbers
fine.
on this
Yeah,
Wednesday
yeah.
morning.
and at the full board, we probably will just go over first few pages of the executive summary. I think we want to dive into that policy.
Right.
Yeah.
Okay, great.
Thank you.
Thanks for all the work, by the way.
Yes, thank you.
Well, you too.
Well, no worries, which is like.
And Drew had some role in all of this.
Yes, getting it done. So thanks, Drew.
All right.